What if I told you the biggest stock market crashes are actually the best wealth building opportunities of your life? And yet, 90% of people lose money during them. Today, I'm going to show you exactly what to do when the market crashes, so you don't panic, you profit. In the next few minutes, I'll give you a simple two-part strategy that can help you survive and even thrive during market crashes over the next 10 to 15 years. The golden rule, mindset shift. Before we talk about money, we need to fix your mindset. Because during crashes, the media will scream, markets are collapsing, recession is coming, sell everything. But here's the truth. The market is not under your control, but your reaction is. Every major crash in history, from 2008 to COVID, eventually led to new highs. So instead of fear, choose clarity. Asset allocation strategy. Now let's get practical. Before you invest a single dollar during a crash, ask yourself these three questions. Question 1. If your investments drop another 20–50%, will you stay calm or panic? If you panic, don't invest right now. Seriously. Sit it out. Question 2. Can you keep this money invested for at least 5 years? If not, don't invest. Short-term money plus stock market equals disaster. Question 3. Will you continue earning and investing in the future? If you're young, 20s, 30s, early 40s, you have time on your side. Market falls. Great. You can buy more. But if you're close to retirement, you need to be more conservative. Big mistake to avoid, very important. Never, and I repeat, never, pull money from everywhere. Gold, savings, emergency funds, just to invest in stocks during a crash. That's how people go bankrupt. Yes, a few get lucky, but 9 out of 10 lose everything. Don't gamble your future. Smart averaging strategy. Here's a simple rule. Never put more than 5 to 10% of your portfolio in one stock. Now, how to invest during a fall. Invest a small portion first. If the stock drops 20 to 25%, rightward arrow, invest more. If it drops again, rightward arrow, add a little more. But after that, stop. Don't keep throwing money endlessly. Part 3, how to pick winning stocks. Just because a stock is down 30% does not mean it's bad. And just because it's cheap does not mean it's good. So how do you pick winners? Ask these. 1. Is it a leader? Top companies survive. Weak ones disappear. 2. Strong track record. Did it survive past crises like COVID, recession, economic slowdowns? Strong companies always bounce back. 3. Strong financials. Low or no debt. Good cash flow. No shady management. Because in bad times, debt kills companies. 4. Is this the best place for your money? There are thousands of stocks. So ask yourself, is this really the best opportunity? Hard truth, cut your losers. This is where most investors fail. They hold bad stocks hoping, I'll sell when I break even. That's ego. Instead, move money from weak companies into strong ones at discount prices. Think like a smart farmer. Don't water dead plants. Market crashes are scary, but they're also rare opportunities. This is when great companies become cheap, smart investors build wealth, and patient people win. So don't panic. Prepare. If you found this helpful, hit like, comment, I'm ready for the crash. subscribe for smarter investing strategies, and share this with someone who's worried about the market right now.